Hello, it's Simon here from FTSE Day. It is the 21st of June 2012, and I'm here to talk about today's market. It is, well, as close as makes no difference to 4:30. So we're up for the open at 8 a.m. and the market went up and made a high. There wasn't a great deal for us to do there because of yesterday's previous highs. No idea where it's going to stop, so we'll just sit and watch it, have some patience, which is something I'm going to come on to in more detail. The market went down to 5574-ish on that spike, at least on these charts anyway, and then came back up. If you remember that 5574, we'll have a discussion about that a bit later and why we were long from that trade. Market's then gone back up, hit 0-0, which isn't a surprise. Gone tested 0-0, could have had an easy couple of shorts from there. And third time it's broke through and made its daily highs, or at least the daily highs at the time of me speaking. Again, if you look at what this morning high was at 8 o'clock, we'll round it up to 510. So there's always going to possibly be half a pip out, or point, should I say, as it's an indice, as I keep getting told, but not that it makes any difference. Markets come back up midday, tested the high, back down, tested the high, back down, nearly tested the high again, broke through, and then continued down again, tested the daily low, come back up. Again, look at this number, 0-0. Look how the market interacts with 0-0 numbers, and then it's gone back down and broken through and made a new daily low at the time we're speaking. A couple of points I'd like to make. The first is what you'll notice is the more times the level gets tested, the more likely it is to break. As you can see, when we're talking about 0-0 here, call that a test. 2, 3, 4, 5 finally breaks through. So the more times it's getting tested, the more likely it is to break. Again, with the bottom, 1 test, 2 test, 3rd test, it breaks. So that's something we just have to consider when we're trading basic daily highs and daily lows, that the more time to get tested, the likely they're going to break. And often when they break, particularly in a tight range like today, they can break out quite rapidly. So that all comes down to risk management and knowing that if a trade's invalid, you get straight out, which hopefully you do. Another thing I'd like to talk about is there's been a couple of days this week, or certainly a couple of time periods within the day where there's been not a great deal to do, and the saying goes, "The devil makes work for idle hands," and I suspect that's happened to quite a few people. And the point there is that you need to stick to your plan, stick to your setups, and if there's nothing to do, then there's nothing to do. You need to find, if you find yourself with itchy fingers, or you really feel like you're missing out, or you need to be in a trade all the time, I think you need to address those underlying issues. Sort of a superficial solution would be to distract yourself, and I don't know, if you sat at your computer all day, watch iPlayer, watch YouTube, or go do something else, set some alarms for key levels that you're looking to trade off. The point is, if you until you get to the point where you can comfortably sit and not be bothered about trading because you know nothing's on, it might be worth putting some contingencies in place, shall we call them, where you can sort of distract yourself in order for you not to make trades you haven't planned. I mean, how many times have you got up and planned what trades you're going to make? And by planned, I mean sticking to your strategy and your methodology, and then ended up taking trades you haven't planned when the trades you planned would have worked out. I hope that makes sense. I think it does. But yeah, the point there is that if there's nothing to do, there's nothing to do. So find something else to do. You don't need to be jumping a trade off the open. The market's open all days. It's worth waiting for your setups. And the setups we use, we've had quite a few today. So no doubt all our members have made some good money. From looking at our live room, I can see quite a few have. So that's all good. We'll come back to the 74 level I was talking about, and the reason we suggested, well, I'll show you that suggested it was going to be a good level to go long from this morning was after big moves although we like to keep things very simple and just use price action. If we go onto the hourly chart, where I've conveniently already drawn a Blue Peter Fibonacci, we can see that if we look on the 21st June where my cursor is, after a big move up, draw fib lines, there's the high, 38.2 retracement, and there we go, and it's bounced off that. So that was very much tradable. You could have traded that with a pretty tight stop as well in today's circumstances. As long as you manage your risk, you can always afford to have a trade that is making a low for the first time if you're confident it's corroborated by something else, such as a fib line. So back to the 5 minutes. What's the market doing now? Not a great deal. Not that I'm interested because I've made my targets for the day, so I don't really care. I'm going to go out after I've finished this video. Another thing I'd just like to point out is it's very easy for me to retrospectively talk about what trades we have taken and would have taken and what levels we thought were key. You know, anyone can trade like that, and no doubt a lot of people do, albeit they won't make any money. I'll just point out as an example of our daily email. Today, 7:44 in the morning. We talk about looking for selling highs, which we've done all day, and then 76 is actually a good place for a long. Can you see why? I've just shown you why. Albeit it got to 74. You know, as I said earlier, a pip or two doesn't matter. So you know, that's what we do every day. We try and look to try and plan a trade and see what levels we're looking at. But what's always important is no matter what you think before the market opens, you have to be very much open to what the market's telling you and not stick rigidly. You know, the market's always right. You just have to take what it offers. So that's all I've got to say. Well, thanks for listening, and hopefully there's some benefit. If I can help you in any other way, member or not, you can email me at simon@ftseday.uk.co.uk, should I say, and I'll get back to you if you want to discuss anything. Like I say, that's you don't have to be a member for me to help you, because that's one of the things we do. We want everyone to become better traders, not just people who are our members. Thank you for that. Bye bye.